Hi, this is Oli Hille on the 7th of June 2013, and I am just recording a very quick video on the Nikkei index. Here we are, NIYM3, which on my system is the code for the Nikkei Futures contract. And I want to talk about a trade that I've just taken, and I'm very happy with this trade, and I also lost money on it. Now you might be scratching your head thinking, how is that possible that I was happy with the trade and I lost money on it? Isn't that the opposite of what we should be thinking and believing about trading? Well, let me start by saying to you or asking you, if somebody offered you a trade where every time they tossed a coin and it came up heads, they gave you $10, and every time it came up tails, you gave them $1, so it's 10 to 1 in your favor, would you take that trade? The answer is yes, you'd take it every time. Now, if you make $10 every time it comes up heads and lose $1 every time it comes up tails, you've got a 10 to 1 advantage. But what if it comes up tails 5 times in a row? You've just lost $5. Then the person asks you again, would you take that trade? And the answer is yes. Even though you lost 5 times in a row and you just lost $5, you know it's a good trade because the probability is in your favor. Well, I just took a trade where the probability was in my favor and I lost money. And I'm very happy with the trade because it was a high probability trade. It was likely to work. In actual fact, it didn't. And that's just trading sometimes. So I walk away. I took a very small loss, less than 1/4% of my trading capital, so very tiny loss. That's another reason I'm happy with it. Obviously, if I'd taken a big loss, I wouldn't be that happy. But let me talk you through the trade on the Nikkei index, and I'll explain how I came to take this trade. Okay, so here we are, the Nikkei. This is the 4-hour chart. Let's just go back, and you can see, and this goes right back to February when the uptrend started, goes up and up and up, comes up and comes right up to very close to 16,000, and ever since then it's been in a downtrend. Very clearly we can see the downtrend. So I'm interested now in a continuation of the downtrend and opportunities to trade this from the short side. So I look at only the information that is presented to me on the chart since the downtrend began or since the turnaround, because I'm looking at it, what happened on the downtrend. Now these are 4-hour candles. You'll see in this little box here the candle time changing as I go through. So as I go through each candle, you see the candle changing. Now I took the trade after 4 p.m. on the 7th, which is a Friday, and that is 4 p.m. New Zealand time, so just bear that in mind. It'll be a different time zone depending on where you are in the world, but that's not so relevant because you'll be able to follow this trade regardless of the time frame. So I'm only interested in the candles that start with 4 p.m., which you can see right now in that bottom left hand corner. This is a 4 p.m. candle. Okay, so I'm only interested in those candles because that's the candle that I was trading off. Okay, so I go through and I'm interested in what happened every time there was a break down below the 4-hour candle. Sorry, a breakdown below the previous candle. So here is the 12 p.m. candle, and if I'm looking for what would happen if I took a trade right here breaking down below the low of this candle here. So here's my trigger candle, here's my entry candle. If I take the trade 1 pip, or in fact this works on 5s, so it's 5 pips below there, what would have happened? Okay, so here's my entry candle. Trigger candle, entry candle. I would have entered on the break down below of that candle, and it would have been profitable because as soon as this candle ends, then I put my stop below the low, below the high of that candle. Sorry, say that again. Because my stop is when I enter this candle is above the high, so I enter down below the low. My stop is above the high. So if it goes above the high, I lose and I'm out. I take the entry candle here. As soon as this candle closes, then I bring my stop down from the high here, which is, let's look at that, 15,960. So my stop would be 15,960. 15,965. After this candle's formed and closed, then I bring my stop down to 15,355. After this candle has closed, I bring the stop down to 14,770. So I keep bringing my stop down to just above the high of each candle, and you'll see that I finally get stopped out of that trade when this candle forms and breaks above the high of that candle. So my point here is, I look at this candle and I go, had I taken this trade, would I have been profitable? In this situation, yes, I would have. So that's one. Okay, one profitable trade. I'm now looking for the next 4-hour candle, and I'll go through this quickly so the video is short and you can do this in your own time. Next 4-hour candle, this one. Yes, I take this trade, I bring down, candle closes, bring down the trade, bring down the stop, candle closes, bring down the stop, bring down the stop, finally get stopped out there. Profitable again. Second candle, second entry, profitable. 2 out of 2. Where's my next 4-hour candle? My 4 p.m. candle is there. Again, take the entry down there. Profitable because I finally get stopped out down here, which is lower than there. So now I'm 3-0. So 3 profits, 0 losses. Where's my next 4-hour candle? There it is there. Now this candle, you'll notice there is no breakdown below that candle, so I don't enter here. There's no entry in this setup at all because I'm looking for a breakdown below this candle. So this is a nil trade. I do not enter this trade. I cannot make a profit or a loss, so I go on to my next one. Here is my next one, my next 4-hour candle. As you can see, we broke lower again, profit. Now I'm up to 4 profits, 0 losses. Where's my next candle? There it is, 4-hour candle. I enter down here. So I go down into here. I bring my stop to the top of that candle. I get stopped out for a small loss. Okay, so there's 1 loss. So at the moment I'm 4 profits, 1 loss. I go to the next candle. Here's my 4 p.m. candle. You can see I take it short. Stop down below there, bring my stop down, get stopped out at the top of that candle, which is below the entry point, profit. Now I'm 5 profits, 1 loss. My next 4 p.m. candle is this one. Again, you can see quite clearly candles go down, finally get stopped out there, profit. 6 profits, 1 loss. Here is my next 4 p.m. candle. There's my next 4 p.m. candle. As you can see, there is no breakdown below on the next candle, so I do not take a trade there. No trade, no profit, no loss. Looking for the next one. There's my 4 p.m. candle, so I enter at the low below there. Profitable, bring my stop down, bring my stop down, finally get stopped out there. Lovely big profit. Okay, there we are. 7 profits, 1 loss. I'm looking for my next 4 p.m. candle, which is this one here, which is the one I entered on today. And why did I enter it? Because I've noticed something right from the beginning of this down move. Had I taken this trade, I've got a 7-1 profit and loss ratio. I love that ratio. What I did was I had my entry obviously down at the bottom of this candle, so if it broke down below, as you can see it did break down below. Unfortunately for me, it also broke after it had gone to the low. It went up and stopped me out by just 10 pips, in fact by 5. My stop here, as you can see down in the bottom left hand corner, the high is 12,855, so my stop was 12,860. Next candle breaks, you see the high is 12,865, so it actually just goes slightly above. May keep going, who knows. That trade, I made a very small loss. Okay, so it was a losing trade, but I'm very happy with it. Just like if someone offers you 10 to 1 on a coin toss, this was an opportunity to continue what had been 7 profits, 1 loss. Right now it's 7 profits, 2 losses. If I get a chance to trade this again next week, I will. And you can follow this yourself. And what I love about this trade is that it is a low risk trade. Now what I would not recommend you do is enter this after a very big candle. So if you've got a candle that's like 500 points deep, you don't want to be entering with a stop way up here, because obviously either your position size would have to be tiny or you're risking a great deal. So only enter, if you're going to do this type of trade, on a small candle. This is a perfect candle. Of course I lost money on this trade, but this is a perfect candle, nice and small, very low risk. It hardly hurt me to lose less than 1/4% of my capital, and you know, it gave me a very good reward to risk opportunity. Hope that's helpful. Obviously you can apply the same strategy to any instrument you like. I love looking at 4-hour candles. I love looking for the break of those candles. Obviously in an uptrend I'm looking for a break above with a stop below the candle. In a downtrend I'm looking for an entry below the break of the candle with a stop above the candle. You can also do this on the 8-hour chart. I wouldn't go any lower than 4 hours because there's too much volatility involved. You can get stopped out really quickly just on a quick move. But the 4-hour and 8-hour candle, great. You can even do it on the daily chart if you want to take a longer trade. Happy trading. Hope you enjoyed the video.